Good afternoon, everyone. Welcome back to my channel. Today, we're going to talk about the 5 best Vanguard ETFs to buy today, to hold for now and forever. So we'll go over this article real quick, and then so you can visually see, and then we're going to dive right into it. But before we start, before I tell you the secrets of the ETFs that you can be able to invest into for the long haul for retirement, I want to say before we start, like and subscribe to my channel, share this lovely content because you never know who may need it, especially for the new up and coming beginner investors. May not know where to look, what these ETFs are, and I'm going to go through each one just so you know what each one does and to see how you can tailor to either your dividend portfolio or your growth portfolio to basically retire. So let's go through these 5 best Vanguard ETFs to hold for forever. So right here, if you want to build a diversified portfolio, you're going to see these individual tickers. And first is the VTI, the total stock market. It reflects the entire economy, tracking over 4,000 companies. Another ETF that I speak highly of is VOO. VOO, 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 VOO. Is the Vanguard S&P 500 SP 500 ETF. It includes the 500 largest companies in the United States. So think of all of the top 500 companies: United Healthcare, Tesla, Berkshire Hathaway, uh, Microsoft, Apple, Amazon, etc. And for individuals who are really at the stage of wanting to retire or at that age of retirement, BND, which is Vanguard's Total Bond Market Index Fund, give you exposure to the bond market. So bonds in your portfolio sort of helps your portfolio kind of balance your portfolio off when you have a total portfolio of just stocks. And so in times of a recession or when the market tapers or the market dips a lot, like right now, your portfolio is going to dip, but it's not going to dip as much as if you were in 100% stocks. And then right here, basically, we're just going to go into down here, just what VTI, what VOO is. We're not going to go into basically all this and that. Here you go. You go to investorjunkie.com and look at the best Vanguard ETFs, and they will go into detail. I just wanted to show you guys the ticker symbols, what each what VTI, what VOO, what it comprises of, and I just wanted to just show you, in theory, of what you can look into. But I'm about to go into detail right now. The first stock needs no introduction. VOO, the S&P 500, the top 500 companies in the U.S. As you see, it costs $368.14. But as you know, it costs $368.14 to buy one share. But you don't have to buy all the shares at once, or you don't have to have the whole 200. You don't have to have the whole $368 at once. You can buy into it, so you can buy $50 worth, $100 worth. You can do 250 per month, and you can adds up to as many shares as you need of VOO. And as you see, VOO has 23% in technology, 15% in healthcare, 13% in financials. And here are the top 10 holdings. And so what you commonly see is that in a lot of these ETFs, it pretty much have the top 10 the same amount of stocks, but it just has it invested in a certain amount of percentages. And depending on a certain amount of percentage, it depends on how much of a return you're going to get, because right now we're in a recession, so we're in a bear market. But usually in a bull market, depending on the percentages in Apple, Tesla, etc., will swing how much of a return a financial manager will want. And so this is a VOO. It mirrors the index of the S&P 500. The next ETF is VTI. It needs no introductions. It invests in over 4,000 stocks. It's pretty much the entire stock market. It costs $201 to invest in VTI. And usually what people tend to do is that They either buy VOO or VTI, and then that's it. They don't worry about the rest. And VOO and VTI are best for individuals who just want just a simple investing plan. They just want to just buy the whole entire market. When the market goes up, they make money. When the market goes down, they lost some money, but at the same time, you can stick it out. And the top 10 holdings for VTI is Apple, Microsoft, Amazon, Google, Berkshire Hathaway, United Healthcare. It's similar to VOO. VOO and VTI overlaps. It's just so happens that VTI has VOO is the top 500, so those top 500 are going to be in VTI. But since VTI has over 4,000 stocks in it, it has the stocks of VTI, and then also it has the mid caps like Chipotle, and then it has the small cap stocks as well. So if you want to buy the whole market, if you want to buy and have exposure in the mid caps and then also small caps, then just buy VTI and that's it. Buy $200, $100, $150 worth of VTI per month, and then boom, that's it. And that's as simple of an investment strategy as you can get. Okay, here goes for my real estate investors. So for all my real estate investors or people who are interested in real estate, VNQ is your way to get real estate exposure. It costs $88.09, and you can have real estate exposure without having the physical real estate, and it pays a delicious dividend. But before we get into how much of the dividend it costs, let's see the type of holdings inside of VNQ. So it has it has the Vanguard Real Estate Index, Prologis, American Tower. I have this. Crown Castle. I want this. Realty Income is the monthly dividend. The monthly dividend stock. It's a dividend risk crap. Been paying dividends for the past, and it's been been increasing their dividends for the past 27, 28 years. Uh, and then you have Welltower, and then it has in total 171 holdings. And this right here gives you the real estate exposure that you need. And right here, it it has a 3.68% dividend yield, and it pays roughly uh, $1.16 per share per quarter. So as you can see, if you just put in if you spend $100 a month and you bought VNQ, you can see you can build your wealth on top of your day job, on top of your uh, if you do Uber, you do Uber Eats, or you do Grubhub, you can build up your your passive income really fast with just extra money and then also VNQ. If you love growth, VUG is the way to go. I love VUG. And I put two growth funds, VUG and VOOG, and for the ones individuals who like growth and want more of the tech components. So here it has 40% into tech, and the top 10 holdings, of course, is going to be Apple, Microsoft, Amazon, has some Tesla, Visa, Microsoft, and Home Depot. And the reason why I love VUG is because it has a small dividend yield, but over the past 5 years, man, it's been uh, it's been basically like huge punch in terms of returns. Like 10 years ago, it was $80. Now is like roughly like $231. Like this VUG punch a lot of growth in your portfolio. But also, if you just wanted something different than VUG, you can go with VOOG. And as you saw with VUG, it invested about 40% of tech in VOOG. It invested roughly 29% in tech. So big difference. And then also it's like 21% in healthcare. And then you see the difference between uh, VOOG is that, yes, it has the tech companies, but then it's really high in healthcare. United Healthcare has ExxonMobil. VUG didn't have ExxonMobil. And then I think it's another holding that's like right under here that like another healthcare company. I think it's like AbbVie that really pushed the returns of VOOG compared to owning VUG. And then my favorite, if you love tech stocks, uh, just all tech, you believe that tech is the future, whether it's uh, IT consulting, whether it's software, hardware, rather it's you believe in just companies like Texas Instruments, Broadcom, uh, all those type of stocks, then VGT is the way to go. I love my IT and my software stuff, and I see these IT stocks as the future. And even though we're down right now due to a recession, Apple, Microsoft, Nvidia, Broadcom, Accenture, Adobe, Texas Instruments, these type of stocks has been averaging returns of, man, on the low end, low scale, 20%. On a high scale, on per year, so a lot of them produce about 50%. And if you do the rule of 72, by owning the stock and you put at least like probably 5 to 10,000 in certain stocks, you can make a lot of money, especially Tesla. So instead of being super risky and investing in just one single stock, you can invest into all of the IT stocks and put in $150, even $200 per month, and just let your money grow. And the two growth like IT ETFs that I really like is either VGT or QQQ. But we're not gonna talk about QQQ because this video is all about the top 5 Vanguard ETFs. So you can't go wrong that you can invest into for the future for either for retirement or early retirement. You can't go wrong with any of these. VU, VTI, VNQ, VU, VUG, VUG, and then lastly, I snuck in a last Vanguard ETF. I know I said 5, but the actual 6th one is the Vanguard High Dividend Yield. So these are for individuals who either want more bang for your buck in either your dividend portfolio, in your retirement portfolio, or in your taxable account where you just want something just to pay your bills. And VYM is perfect. It is not going to be an investment that's going to grow your income substantially like investing into Tesla or Microsoft or the S&P 500, but at the same time it will increase the stock price roughly 7 to 10%. So not bad. Your investment will grow 7 to 10%, but most importantly, it has holdings like Johnson and Johnson, ExxonMobil, J.P. Morgan Chase Bank, Procter and Gamble, Chevron, Home Depot, like AbbVie. All these companies are stable, cash positive flow stocks, and then these stocks where if you have a side business and a job, and then you also have a hustle, you can use your hustle to buy VYM or your job to buy VYM, reinvest the dividends within itself, let it grow, and you can eventually see within 2, 3, 4, 5 years of investing in VYM, that VYM dividends, you can use it to pay your bills. How good is that? Use the dividends to pay your bills or use the dividends to eventually live off of down the line. I'm giving you guys the blueprint of how to pay your bills passively. So VYM only costs $109.61. It is a gem. So again, let's go over it. It's VU, S&P 500 ETF, the VTI, the total stock market, the Vanguard Real Estate, VNQ, the Vanguard Growth ETF, VUG, but then you also have the Vanguard S&P 500 Growth ETF, VUG, which is also another growth ETF. You have, if you love tech, like I love tech, you have VGT, Vanguard's Information Technology ETF. And lastly, if you love cash money, baby, cash money, you got VYM, Vanguard's High Dividend Yield ETF. So hopefully this was this is very good information for you guys, especially I know you have heard the prior to the first two because I speak about them a lot in my videos, but a lot of the rest of them like VNQ, VOOG, and also VGT. I really have really brought those up, so definitely write those down. Do more research before you buy into it. Remember, this is for educational purposes only. If you enjoy this content, like and subscribe, share this video, because I'm pretty sure a lot of people don't know what type of ETFs to start their retirement journey with, or how to retire. This video was less information in terms of charts and graphs and investment calculators, but more about the different type of investments and what they are, and just get you more familiarized with these investments, so that just to educate yourself, to know what you need to buy. Just keep investment simple. Keep investing simple. Let's not make it hard. If you enjoyed it, subscribe to my channel. Embark on this journey. I'm pretty sure the next video I'm going to show updates on my dividend portfolio. I bought roughly $500 to $750 worth of dividend stocks, and if you're interested to see what I bought, like and come and look at what I bought. All right, guys, enjoy your day.